Hello, Warriors. Good turnaround Tuesday, everybody. How's everyone doing? Pretty significant day in the S&Ps yesterday. Blake pointed it out. I pointed it out, the divergences that we had up here on the 4-hour. Okay, so now we're approaching the throwover line, one of them right here. Last week's lows was about 30.90. So after taking out last week's highs early in the week, we're now challenging last week's lows or the week before lows. It's an outside candle. I think very significant. Okay, so that this could set up a pretty good correction. It's something that we've been talking about here on the weekly. We still had divergence. So short term, what do? You just sell it anywhere? I don't know about that. I think it could have one more rally, maybe back into this 3120, 3130 level over the next day or so. I would look at this and say, there could be a turnaround Tuesday reaction in this. Also, you look at the dollar. Some interesting questions may have been answered yesterday. So the market went down, the dollar went down, and there was absolutely no flight to quality at all. Here's your TLT. It was down 211. Okay, it's going to be up today. I actually think, this was a buying opportunity. I talked about a pullback in here to put in kind of a right shoulder. See this? Head, shoulder, breakout, which is going to lead to new highs. So today we're getting some flight to quality. Yesterday they clobbered it, but there was really nowhere to hide. Gold didn't come back. The place to hide was outside the US dollar. Oh, I think that we could trade back down towards here. Forex gal. Before it's over, maybe 29.5 or so. Okay, I think we'll attack these moving averages, which comes in on the next throwover line, 30.60. A lot of people are going to be looking at 30.30, these highs right here. So I think these two MAs may end up being magnets for this particular move. I'm not in the crash camp. I'm in the correction camp. Part of it is because we were confirming on the daily up here, right? Does that help you? Okay, and also what was interesting besides the interest rates not coming back or no flight to quality yesterday. So Blake and I were talking about the euro earlier in the day, kept pushing up. I still think that we're going to see 112. Right now we're getting just what to me looks like corrective action after this. Here's your flagpole, getting some type of flagging action in here, right? But to me, this is not topping action. And I want to show this. The euro pound was right on the doorstep of breaking out of this wedge, and they turned it down. I think the next time to buy the euro would be when EG is around 84.80. I'm actually going to try this trade down here. Should the RSI hold above 30 down here at one more new low, looks like on the 4-hour it will. It might have to do some work on the 1-hour, and it might even hold here. So something to keep an eye on with the EG knocking on the door. I do think that we could see moving averages tested again here after we come out of this triangle, this wedge here. Okay. Who needs a shovel? Oh, it's snowing out there. Hi, ping pong. I know there was something else. Oh, in the oil, I thought we'd get maybe like some type of C wave here, but Steve may have been right that we just had a rally back to, this is what he showed the daily, back to this breakdown line here. If it can generate one more wave like this from before it makes new lows, I think you have to be a seller between 57 and 57 and a half. So those are my views. Those are my calls. The next one's yours. Call me at 800-899-BEAR. I'm just kidding. You'll get Vermont Teddy Bear here. Oh, this is what I wanted to talk about. So I've been talking about the yuan. Okay. So the yuan is threatening, this moving average right here. And now this breakout test is held for quite some time. It's looking good. Let's see if we can, break out here. Maybe it'll be a pause at this level, and it gives us a chance in the S&Ps to do something. But this was always what had me concerned about risk. And then you go out to the weekly, and man, it looks classic, right? So this is your trade deal, right? This is your trade deal currency and your risk off currency. So I think that's about it that I wanted to cover, but found it interesting yesterday that dollars weakening with equities weakening and rates yields actually moving up yesterday. So haven't seen that for a while, but it makes me think that this correction might continue until we have some type of low in the dollar. And I know some people are talking 96 here, right here, so we'll see. The dollar today is, not as weak as the S&P. So we'll see what happens here. But I don't think we get a real good bottom in the dollar until we're at 96, right around here, maybe even 94. So that's my take on what's going on here. So yesterday was a big day in everything. Normally it's a follow-through day from last week, but Friday, it's amazing how important of a day it was, except for the S&Ps, because you got the turn in the dollar when people were sleeping, hung over on tryptophan. You got a $3 break in crude when people were still digesting their turkey, and then we turned in the S&Ps yesterday. So after a big day, usually it's not smart the day after something, a significant price move, that you try and fade it, even for a scalp. So, it was bearish. A dollar yesterday was there for that. And I'm not going to try and buy the dollar. I'm going to look for reactions to what happened yesterday. Fib retracements are the word of the day for me. Okay, so looking for fib retracements from wherever the lows come off this initial break and everything I talked about. Okay, is it all clear? Any questions? Okay, great. We do have the cyber deal working. So, you may want to take advantage of Cyber Week, because you're not going to find a better team anywhere. How you doing, Blake?
Hey, good morning, Coach.
Hey, got some decent follow through yesterday. Good eye on S&Ps yesterday, buddy.
Well, the S&P, it's been tricky. I mean, it hasn't been clear cut. I think, the here, let me go ahead and take over really quick. Make sure I'm on the right screen. Okay. So, as far as the S&P goes, we were looking a little overbought. Yesterday was obviously a pretty big down day as Trump announced some additional steel tariffs on some of the emerging market countries, and then overnight, there's Donald Trump was in London and he said there's no timeline on doing a deal. Maybe it'll be better if we don't even do a deal until after the election. That spooked the markets again. It's not something that he hasn't said. It's not an uncommon comment from Trump. It's
What
more,
is?
well, I think what he was saying is more
Yeah.
posturing.
Yeah.
I mean, the thing is he's got to get a deal done. He's got to take whatever deal China throws at him now, because now we're getting to, the the how should I say, like, um,
Kind of like
well, like
now or
kind of,
never.
yeah, well, kind of,
It's the end, the
he
end game, right?
he's
The
built
end
up
game.
so much expectations that a China deal is going to get done, that if he doesn't do it, he doesn't do whatever he's got, whatever they give him, the risk of losing the 2020 election is going to be increased. And that's not what he wants to do. He wants to win. So, he's built up this big hype around this phase one China trade deal. Now he's kind of boxed himself in a corner, and he's saying today that, maybe it'll be better. It's all up to him. The timeline's on him. It's not on China. It's his doing. And maybe it's better I just wait till after, the 2020 election. So when he says something like that at this stage in the game, is it more posturing to get China to move, or is it him starting to build a case that he will stretch this out because they're just not ready? So, it's, in my opinion, it's going to be really interesting to see where the S&P goes. I think that a value proposition in the S&P is probably 30-20 right here. So if I had to imagine what I think is where buyers are going to step in, is going to be somewhere down here. So if I had to imagine, that's it. Now, does that mean that that's going to happen? No. I mean, as you just pointed out, Dale, we have a throwover. Maybe the throwover leads to a complete and utter breakdown, which it could. But I think that the place that buyers are going to step in to the S&P is going to be around 30-20. And I think you're going to find value players down there. Like I said, do I think that's where the market stops? I don't know. I mean, we'll have to just dissect the information and the tweets that we have at that point in time, should we get down there, to see if that's really the place where you want to step in and buy S&Ps. But I think that is what we're dealing with right now.
It's still a big trade from here if you could finesse selling a rally.
It is. And, so there are some really big charts that are developing this morning. So I'm going to have
yen
to.
too. Are you going to bring up US dollar yen?
The dollar yen, which is so frustrating to me. So frustrating. I was short last week. I had a big short at 109.20. Roughly was my cost average. We rallied above the 109.50. We were probing up there. I'm like, nah, this thing's not going to break out. But as we dropped through 109.40 and I closed it at 44, I took a loss. I was like, I'm going to just pull it off here. I mean, we're too close to a possible China trade deal. I'm going to take it off the table because I just don't want to, deal with the stress of having it. And of course, here we are today. The woulda, shoulda, couldas, right? I don't live in that land, but here we are back below the 200-day moving average. Now, the dollar yen, obviously we're going to have some pretty key support right down here around the 50-day moving average, somewhere around 108.50. We're still 25 pips away from there. So how and what happens down there, we'll see. Again, everything is so fluid. Everything is based off what's happening with the trade war, tweets, and by the way, our ISM data yesterday was
real
horrendous.
Weak.
Very weak. And that just added fuel to the fire for the dollar yen to come down. So now other charts that I think we should be paying attention to. So we have the cable. The cable is pressing it. This is a pennant, guys. And let's all understand that this, and I know I sound like a broken record here. This is a very minor pullback. If you want to go from the false breakdown lows to the highs, that's 24%. That is a shallow ass pullback. Excuse my language. When those pullbacks are that shallow, that is just asking for you know, for a continuation.
Yeah.
Now, if you go, well, Blake, I'm not measuring off there. I'm going to measure off the actual flag pull. Fine.
That's
We
so
haven't
huge.
even pulled back 38%. We're pulling
23.
back. Yeah, maybe like 20, like maybe 30%, 28%.
Yeah.
We're barely pulling back. So again, the risk for the cable right now, and we just probed the 130.10 level. That's the highs at 130.10. We break out, and you know, this could be a real big breakout. Now, the election is next Thursday. It's going to be a late night for me. It's December 12th, right? Yeah, December 12th. So I'm going to be working really late that night. You know, obviously because, you know, we get a Boris Johnson victory and no hung parliament. The pound dollar is going to go higher because then he'll be able to push his deal through. And that's the bottom line. Now, the thing is, can the pound break out before then? Sure, it can. You know, it absolutely can. And that's why I think you have to pay really close attention to the cable here, because the cable could get a running start ahead of the election next week. You know, I could see a situation where we just start taking stops out and then we consolidate around 132, you know, ahead of the elections. That's entirely possible. It's not out of the question. Another big chart, and I tweeted about it this morning, is gold. I think we have to pay really close attention to gold because, you know, we're looking at the yen and we're looking at the yen strengthen. Well, that corresponds with, you know, the dollar yen, with gold breaking higher. This is a triangle formation. If you guys are ForexAnalytix subscribers, you know, yesterday, let's go to the gold basic technical analysis. You could be a $19 a month ForexAnalytix Lite member, and you still get this analysis. We're in a long-term bullish pennant, but are testing triangle resistance inside the consolidation. A break higher could see 1490. This is yesterday, and this morning, you know, here we are breaking highs. We're at our highs of the session right now as the yen is strengthening. And this gold, you know, if you're a harmonics type of trader, you're probably looking at this. You know, you're looking at, right? Let's do an 88%. You know, you're looking at something like this, right? 161% is to take us close to the 1500 level. But this is, you know, key, you know, pennant resistance. That looks very doable right now. But the thing is if we break above 1500, if we break above 1500, you know, you're talking a retest of the really big resistance. So, you know, hold on. Sorry, it was just some OPEC comments. So I think you got to pay attention to the gold because you got the yen strengthening, you got stocks weakening. That's a recipe for gold to start rallying, right? So really big move could possibly develop here in the gold market. So I wouldn't disregard this at all. And by the way, if we break 1490, 1500, and we come out and you know, test 1550, my dogs are making a lot of noise. I don't know why. So, but I would think it looks something like this if I had to guess. And then we eventually break out, right? We'd hit that major resistance, get everybody excited about some sort of double top, and then, you know, reverse and eventually break out, because this pennant is huge. This is a huge bullish development that, if I had to guess, you know, is pointed to 1750 longer term in gold. I think that's a realistic expectation. So just keep that in mind, you know, when you're dealing with the gold market on what the potential is here. And you might be we're going to 1800. wow, that's a big breakout. It's not. It's not even near the highs that are closer to 1900. So, well, I would say it's not near. It is near, but it's not uncharted territory and something that would be out of the realm of, you know, not possible. It would be possible, you know, should we get a move like that. Um, uh, so those are really the things that I'm focused on this morning. You know, obviously I'm watching this, you know, this bit of risk off move. I want to, you know, be careful with you know what you're doing here, because it is risk off right now. But the question is, how far are we going to go? I mean, you know, you know, is the S&P due to correct to 2,500? No, I don't think so. I'm like, you know, I'm in the same camp as Coach. I think we could see a pullback, but I would get a little nervous as we get towards 3050 or 3020 in the S&P. I wouldn't get too overly excited about risk off. The scary thing about, you know, what you're seeing here is what, you know, Coach has been saying is the risk of this throw over, whether you're talking about a throw over of this channel or a throw over of this, you know, longer term megaphone pattern. You know, if things can continue, and we're down here for a reason. When I say down here for a reason, let's say China says we're going to call off the trade negotiations and we're going to pull back our negotiating teams until you know, February. Let's just say that happens. I'm just throwing that out there. That's a different situation. That's where, yeah, instead of stopping at 3020, yeah, we're probably stopping somewhere around 2800. You know, if it's just correction because it's just more posturing and there's just, you know, we don't get any like official word from China and it's just more, you know, Trump playing the art of the deal playbook, then, you know, we could probably just see 3020 again, and then you're going to see buyers step in. So again, it's a very fluid situation. I don't think you should, you know, get too aggressive one direction or the other, but for the bulls, this is looking a little worrisome. And that's something that I think you gotta be paying attention to, these little false breakouts above the highs. We were really overbought. RSI is starting to drag lower, and it's becoming a risk for bulls. Okay. And let me reiterate what Coach just said. If you guys have not tried out ForexAnalytix, this is the time to do so. This is the oh gosh, I got one more chart to show you after I say this. So we're in our Cyber Monday deal. Buy 1 month, get 1 month free. It does expire tomorrow. Tomorrow we go back to our normally scheduled program. But if you guys, you know, want a great time to be trying out ForexAnalytix, seeing if it's right for you, this is the time to do it. Because if you buy it now, you've got this month and next month to be using ForexAnalytix for $119, which is, you know, based on the technology that you get, the team, the analysis, the ability to be in our chat room with all of our traders here. By the way, this is our chat room with all of our traders here, and you can see that you know, there's about 80 of us in there right now. It's been a little slower recently because of the lack of volatility in the FX market, but you can see we're obviously chatting all. I mean, this is you know, me and Amanda and Paulie and Stelios, and we've been chatting for the last, you know, this is going back just an hour. So and you guys are on Jumbotron, so I'll let you guys say hi on Jumbotron if you want to, really quick. But again, if you want to try out ForexAnalytix, this is the time to do so. While we're in the Cyber Monday deal. Okay, so one last chart I wanted to bring to your attention. Dollar Canadian. Oh, somebody was saying, oh, there's Paulie right there. Dollar Canadian. We have the Bank of Canada tomorrow. All right, this is a really, really key multi-year trend line that comes into play. It's around 133.50 to 134, depending on how you're going to draw your trend line. You know, my office and we were talking about that you can arguably say it's at 134, but if you connect this peak, go through those couple bars there, those long wicks, it takes you around 133.50. We're grinding higher in the dollar Canadian. That's pretty, it suggests risk off as it is when you see the Canadian weaken the way it is. With the Bank of Canada tomorrow, if they come in a little dovish, I mean, you could see, the dollar Canadian start to try to break out here. And keep in mind, guys, you have the RBA and the RBNZ that just met. They both are talking about keeping rates unchanged, and actually the RBA was pretty upbeat last night. But how's their tone going to change if this trade war looks like it's going to extend for another year? I would assume those central banks might be looking at rate cuts, and maybe even more aggressive rate cuts moving forward. The dollar Canadian and the Bank of Canada, they're going to be very observant of what's happening in the US. And if they feel that the trade war looks like it's going to extend even further, you can see the Bank of Canada might come in a little dovish as well. And that would, this, in my opinion, right here, it's a big breakout point. Any which way you slice it, right through here, 133.50 to 134, break above that could be really quite bullish. So again, something I think everybody should have on their radar, because I think everybody and their mother's brother's uncle, including the guys from my office, by the way, over the last several months. Now they're indifferent right now, but I'm just saying the general consensus over the last couple months has been a weaker dollar Canadian. All right. Bank analysis, most people are like, yeah, risk on, Canadian should start to strengthen, blah, 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 blah. Yeah, this move right here is going to catch a lot of people off guard. All right. So I think you got to watch this loony if we start to break out higher going into tomorrow. All right, guys. I'm going to pass it over to Steve and Stelios. Remember, if you want to be part of the Forex Analytics community, this is the time to do it. Cyber Monday deal. Take advantage of it. Don't wait. And I'm going to pass it over to my colleague, Steve and Stelios. Good morning, guys.
Good morning. Hello.
Hi, how you doing?
I'm very well. You were up very early today, weren't you?
Yeah, I had a little bit too much coffee. Can you tell?
Yeah. Good.
No, I was up a little earlier than normal. I got woken up because, I had a bunch of my phone gets triggered under certain circumstances, and then there was the comments that came from Trump about China triggered a bunch of stuff, and so here I got up a little earlier, and I'm like, oh my God, the market's moving. So yeah, it's wakened by the man.
Yeah. Okay.
The life of a trader.
Yeah, the life of a trader. Correct. I can't wait for my nap time. And I know it's only 6 o'clock in the morning right now. All right, guys. Hey, have a great day.
All right.
And everybody, I will see you tomorrow. Thank you, everybody. And we will catch you tomorrow.
Bye-bye, mate.
Bye.
All right, buddy.
Thank you, Blake.
Hi,
Okay.
Steve, Stel.
Hey, Dale. How are you doing, man?
Hey,
All right,
coach.
buddy.
Good,
Hey,
good.
Steve.
Okay, a few comments I have to make. First of all, Forrest Scout says, what do I think about Brexit? And I've said this before a few times. I'll say it again. There are two scenarios for me which make me bearish the pound. Every other scenario makes me bullish the pound. And the two scenarios are, one, no deal Brexit, which let's talk about that in a few seconds. The other one is Jeremy Corbyn becoming the government. That for me is the worst scenario for the pound, and that looks like it's not happening. So even though we're 9 days away, so it's not a lot of time. Things can change, but polls on average are showing him behind by nearly 10 percentage points. So I think we can strike that for now. The question is, no deal Brexit, will we get that or not? Well, Boris Johnson, I think, before these elections now, he showed what he wants to do, and he tried to bring an agreement to the table to Parliament, which actually agreed to it, but they didn't agree on the timing. So I think if Boris Johnson comes to power with a majority, which I think is the most likely scenario, he will push that and he will get it done because if he gets the vote from the public with a majority, they're effectively endorsing what he was trying to do before the elections were called. So I think these two scenarios will most likely be avoided, and that's why I am still bullish the pound. Now, regarding what has happened recently, as Blake very well said, Donald Trump is now waving the tariff wand to the EU, and he did say today that, and I quote, "The EU treats the US very unfairly on trade, and they have to shape up, or things will get very tough." It sounds like a pre-boxing match, talk, right?
Yeah.
But
Muhammad Ali.
yeah, exactly. Rumble in the jungle. But anyway,
Yeah.
he's doing what he knows how to do, and let's see where that takes him. The Europeans.
Well, you saw his body. I mean, he's built just like Rocky. Did you see that, Steve? I mean, Stella, I know you do. You probably have a six-pack, but I mean, he looked great, man. I didn't know Trump trained like that.
If you talk about beer, yeah, I have a six-pack. So the Europeans replied, the French, I think in particular, they said, look, if this is what you're going to do, the European Union, we're all going to be united. So they're not, Trump, if he goes that way, he's going to get a proper fight. So just something to be aware of what's happening now with China. Blake talked about it. So, things are not improving. The Chinese government said they're going to publish a list of what they call unreliable entities. So basically, could be sanctions for US companies. And remember, we have tariffs kicking off on December 15th. It's not, we're not moving forward. That's the thing. Even though every day we get a few comments from US people saying, and Chinese as well, probably, oh yeah, we're very close. We want to make a deal, this and that, but really, we're not getting anything yet. So I think, this is the main reason why stocks are a little bit nervous today, and might continue to be into this, the rest of this week.
It's hard for me to believe the guy went to Wharton, and he went to Wharton and he put sanctions on two countries that are desperate on their way into the abyss, saying they're manipulating their currencies when the devaluation was out of economic duress and capital flight, which he's only going to exacerbate. So you tell me how many people that graduated from Wharton would not know that?
Yeah, well, I tell you what, Brazil and Argentina, they would love to have a currency which is stable and not depreciating.
Yeah, that's what I mean.
Yeah, exactly.
It's almost like it was comparable to what Draghi was doing to depreciate the euro. It's a completely different circumstance that he's drawing a parallel conclusion to.
Yeah, 100% correct. You're 100% correct on that. So yeah, I don't get it.
Yeah, well,
Twilight Zone. Yeah, exactly. What else did I want to mention? We had a little bit of data today. We had the RBA kept rates unchanged as expected, said nothing groundbreaking, so nothing really on that side. And we had the UK construction PMI came in a bit better than expected, but these PMIs have been pretty weak in the last months. They're below 50, so in contractionary
S&P, by the way, and the rest of the indices are shitting the bed. Excuse my language.
Beep. We have the
boy,
censor.
they should have some Pampers.
Yeah.
It's right at that throwover line, Steve, at 390. I mean, it's right at my, I don't own the line. When I say my line,
this is the first support area.
Right here.
Next support area is 3060.
Right.
And after that, it's 3020. So those are the areas: 390, 360, 320. Below 320, things will start becoming, quite jittery.
Yeah, if it holds here, I think you have to be all over it back around 3125. If that happens, what do you think? If we hold here and bounce?
Yeah, I would agree with you. 3130 above there. It's again on bullish modes.
Right.
But it was quite a good reversal yesterday. The DAX was leading the way lower. The DAX was lower for quite some time, and even pre-market, the S&P was reluctant to follow lower, and when it got its excuse to do so, it did so. I think the best chart looking at the 4-hour yesterday was this one.
What was Greg saying yesterday? This is just a corrective pullback.
This one. Look at the S&P 4-hour chart here.
Yeah.
And what we got yesterday, right?
Yeah.
That was a perfect, nice wedge on the 4-hour. And that was brilliant. So yeah, we're testing support as we speak. And I do think that, there we go here.
Yeah.
And I do think that, next move, now that we've done that, is more likely to be there. And from there, we might see, some type of reaction.
Yeah.
So 3090, quite important. I think that we should probably see 3020. I don't think it's very easy to see the market getting immediate support right here. It was overdone anyhow. So I think it's a decent probability that we're going to see lower levels from here, at least for a limited amount of time. So that's what I think. So this,
we're all saying it, and watch it turn out to be a major high. See, we're so conditioned by it, everything being just a temporary.
I agree, but one thing at a time. One thing at a time.
I know.
One thing at a time.
Knowing whether or not something is an intermediate term high or low is rear view mirror stuff. You only know later.
You're either further away or you retracted your microphone, by the way.
Oh yeah.
There you go.
Okay.
Also, yesterday, if you remember, we agreed with Gregor here. If you remember, I was saying before even Gregor came in that crude seemed to be retesting the broken channels, support as resistance. I think it's on its way to move lower from here, especially a daily close below 54.5. I think will take us rather soon to back to 51. So that remains an interesting opportunity here. I tweeted some charts today in the chat room, so I'm going to start from those. I was also mentioning from quite some time ago the importance of the USD SEK now, adding to the fact that the USD SEK has already broken below this ascending wedge since days ago. Now we have an extra element in the equation. We have it testing confluence of multiple supports, which include the 200 daily moving average, the horizontal support area you see there, and this quite clean head and shoulder formations neckline. So, USD SEK below, let's say 948, 947, 948, I think opens up a lot more downside, and that would definitely have also major implications to the dollar pairs in general. We saw yesterday a very big rebound from the Euro USD, which not coincidentally has stalled again at the key 110.70 resistance area. Above that, we then have the confluence of resistances at 111.70, and above that, I think we are more or less certain to get like a big squeeze following. So 10.70, we're right there. Above that, 111.70, and above there, I think we're going to see, because sentiment is still very, very bearish, we're going to see a major squeeze higher in the Euro USD. Also, I know you have been monitoring it for quite some time. The USD Swiss got rejected from the same area it got rejected the previous time, major area of resistance there, confluence, and also potentially a double top once we break through 98.40. And if that happens, then we also have this registering as a double top. So we're currently testing this ascending channel support. A little bit lower, as I said, is the confluence of the 50% fib and that horizontal support area, and that's going to also be the level that's going to trigger that double top, which is going to be pointing another 150 pips to the downside, so roughly to 97 cents. So USD Swiss also on the precipice of a nice move lower. The cable is already attempting to do that. I wrote that in the chat room earlier today. I was more than certain that this was a corrective type of pattern. So far today, we're seeing both price and RSI breaking above the equivalent trendline resistances. Of course, it's still early on the day. We need, more time to confirm that development. But by the end of the day, we're going to know if that's the case. If that's the case, I think we can easily see the cable extend to 133. And I know that there are still quite a few people fighting this and remaining bearish despite the previous move to the upside. Gap still remains above this triangle, so it can also extend higher. Although, admittedly, yesterday we had both an impressive move lower in the DXY, which got rejected from the previous high, and is also in danger, exactly as the USD Swiss, of posting a double top there. You can see below 97.70. We target once again like 97.10. And the USD yen, which, there it is, which was potentially testing once again for fourth consecutive day, this inverted head and shoulder formations neckline got rejected from there again. So does that invalidate the inverted head and shoulders formation scenario? No, it doesn't invalidate it yet. But definitely that was an important area. And once again, it rejected price action. So, unless we break above that, we close above that 109.50, there is a chance that we're going to see, failure, right? So now, having gone through those, which are quite important, I also want to mention that, despite being off the highs, the Kiwi is still above this inverted head and shoulders formations neckline. So, it looks decent. The Aussie has also had a very decent rebound yesterday and, some kind of a follow through so far today. But once again, in order for me to get excited about it, I want to see the 200 daily moving average, the 61.8, and this channel being taken out, all of them passing more or less from 69.30. So, I would, remain very careful with it as long as it trades below. And there are two pairs that actually not many people are paying attention to, but I think that they are of interest, especially one of them. Aussie CAD and Kiwi CAD, and the reason I want to mention them, assuming that I'm going to find them, found them. Let me start from Kiwi CAD. Okay, so Kiwi CAD initially broke from this triangle to the upside, then it broke upside from this channel, right? And it's currently testing the 200 daily moving average. It's obviously overdone in the short term, but it has definitely started, developing something bullish here. Okay, now Aussie CAD has been lagging, but look where it currently is at. I think this is quite an interesting formation here. We have a nice inverted head and shoulders formation, currently testing the neckline. An extension from here would target, somewhere at 94 cents, 94.50. So quite a nice upside. Let's say roughly 300 pips to the upside. So I'm closely paying attention to this. The good thing about it is that it's also uncorrelated like to the US dollar. So should be uncorrelated with the vast majority of the major trades you might be taking at the same time. So that's quite nice. And having seen that, breakout in the Kiwi already and the Aussie's nice reaction. And on the other hand, contrasting that to the USD CAD, which is where? Somewhere hidden. There it is. Contrasting that to the USD CAD, which, as you see, is moving also to the upside, but keep in mind that the USD here is, in the first component. So, CAD is the funding currency in this case. So, they're moving together, which shows that CAD is much, much weaker than the Aussie and the Kiwi at the moment. And especially if we do see USD CAD break above 133.50, I think that's also going to be a very nice indication that the Aussie CAD and the Kiwi CAD might keep doing quite nicely to the upside, right? Because 133.50 is a major confluence of resistances here in the USD CAD, and I do think that if the USD CAD breaks above it, it should extend substantially. Okay, so for all those reasons, I think that if you're looking for uncorrelated to the US dollar trades, Aussie CAD, Kiwi CAD look quite appealing. Now, let me go through your questions. Your thoughts on pound CAD, pound Kiwi, pound USD, and Euro USD. Okay, Euro USD and pound, I already covered. I didn't cover the pound CAD and I didn't cover the pound Kiwi. So let's have a look at the rest of the pound pairs. So pound Aussie. Now, pound Aussie, I indicated that last week again. Guess where it found resistance once more, right? I mean, this trend line is absolutely worth monitoring, right? It has proved again and again and again its value in the market, right? I mean, as you see, this is what, the 6th time that it rejects price action. So getting rejected from that trend line is definitely something that, should, taper your bullishness. But the exact opposite is the case if we manage to breach through it, because one trend line, once you keep retesting it and retesting it and retesting it, and it fails to break, if at some point it does break to the upside, then you should expect extension. So it makes sense to be bearish as long as we stay below it, because the risk-reward ratio is great. I mean, this has been an expanding triangle that dates back to 1.5 years back, actually, right? A little bit more than 1.5 years back. So just imagine if we remain in this expanding triangle, we have a lot of space to move to the downside and still be within this formation. And we're still very, very, very close to resistance. So from a risk reward perspective, it would make sense being short. But once we break, or if we break above that trend line resistance, you don't want to be short in any way, because I think this might explode to the upside. Now, having to do with the pound Kiwi was also looking like it was, it had a nice bullish consolidation, this triangle here, and then it sliced through it yesterday. Now, does this mean that this is not a corrective move? No, it doesn't necessarily mean that, because there is always the second alternative interpretation, that of a, channel, something like this. Okay. Still, the price action we've seen is slow, choppy, and overlapping. Look at this trend line resistance as well here in the RSI. Okay, but that means that we might see lower levels before we see higher levels. And keep in mind that also the pound Kiwi is confined within a larger formation, which is this ascending channel. You can see it here in purple, which also dates back quite some time, actually quite a lot more time than the expanding triangle we saw in the pound Aussie. It dates back to January of 2016. So we're just like a month shy of celebrating 4 years within this ascending channel. So definitely a very, very powerful formation, right? Now, Dale, the analog is playing out as detailed, working on target areas for this correction now, still expecting higher highs in S&P next year. I will agree with Ben. It is quite likely because we definitely know for sure that central banks and politicians are going to do the utmost and throw everything at it to maintain this business cycle at least until next November, and not rattle any feathers until then. Now, will they succeed? In my personal opinion, they will also need a lot of luck to succeed because we are so overdone, we are so overvalued, we are so much further away from fair valuations in almost everything that only by having the intention of supporting the situation is not enough. You will also need to avoid any possible shocks, and sometimes avoiding shocks is not something. Shocks are not something that can be easily predicted, and sometimes some type of that shock can disintegrate a very brittle situation like the one we have in the global economy at the moment. So I think they will do everything they can to support this for another year. But there is a real danger that something is going to happen and they're going to fail. And when it fails, it's going to fail spectacularly. I can guarantee you. It's going to fail spectacularly. Could you also give your views on natural gas and the VIX? Yeah, absolutely. Despite a very, very, very brief move below, and I'm going to show you what I mean. The VIX is still holding the diverging ascending trend line support that dates back to November of 2017. So it dates back like 2 years, right? So we've seen this clear divergence in what stock prices have been doing, which is climbing to new all-time highs, while the VIX keeps posting higher lows, right? And we have this trend line support. We bridged it like for 2.5 days, and now we gapped higher again, and look at us go. So the VIX is still showing that we are at the last stages of this market, and as I've said, I do not think that we're going to see again during this business cycle single-digit VIX readings. I think it's going to take years for that to happen again. And I'm now officially only just like 27 days away from winning that bet I had with my friend Tures since last year. And I think, it's looking pretty decent. So that's what I think about the VIX. I already said what I think about the crude. I can show you DAX, but your other question was about natural gas. So natural gas held this ascending trend line support and the 61.8. So 1 point for the bulls there, right? So as I said, 1 point for the bulls. Also, if you wanted to redraw this a little bit. Yep. No, that's not what I wanted to do. So if you want to redraw this a little bit, like this, you'll see it's even better looking, right? So we held this nice confluence of supports there. On the other hand, it's very troubling that the rebound higher was in perfect two legs, right? A, B, C, perfect. I mean, first leg higher equal to the second leg higher. So the line in the sand, risk reward favors you being bullish at the moment. Why? Because you have a very, very close stop loss just below this confluence of supports, right? So like just below this 2.29, you can be long against it, and from a risk reward perspective, you have a decent trade in your hands. Break below this, I think we're headed to new lows, as simple as that. And in general, as I said, the rebound didn't look impulsive in any way. So I would be quite worried about it. Of course, I've spoken, look at this RSI divergence that we also had back there. So it was a nice signal as well. There is one more thing to mention here. I've mentioned it multiple times in the past. Keep in mind that actual commodities and real assets are not normally distributed. They always have like a long tail on the right-hand side. And that is because they are real tangible assets, so their prices cannot remain extremely low for big periods of times, while on the opposite, they can have like explosive moves to the upside, right? So that is a general rule, meaning that generally when you have very low prices in tangible commodities, it is usually a good long-term buying opportunity, as we saw in crude some years ago, when I remember very particularly with Stelios, we were saying again and again back here when crude was plunging towards like 25, and we had started seeing like stupid predictions like single digits and like teens that crude is going to 15 or whatever, and we were saying that, listen, there's absolutely no chance something like that is going to happen, because there is real value in crude and world is still dependent on crude, and such predictions are going to send people to to the poorhouse. And you can see that we recovered like from 26 to 76, right? And obviously we bottomed when everybody was like extremely bearish, and when the usual backwardation had turned to a contango. So natural gas is rather cheap at the moment, so that bottom line, so that is one more thing you have in your favor, besides what I said, that you have a very predictable and a very close stop loss. Ziggy says, and the shock will probably be a stab toe at first. Gautam says, this is just a message from China. Yeah, now personally, I've told you my opinion again and again, having to do with the US-China deal. I think that it's going to be absolutely impossible for Trump to deliver a real deal, something that's going to be really beneficial. By the way, stocks keep pushing new lows since the beginning of the webinar. So as I've said, since the beginning of this saga, in my opinion, Trump is going to be completely unable to deliver something tangible. So that gives him two options. Option number one, going the NAFTA way, producing something of very low value, and then selling it as like something amazing. I don't think the market is going to go for it. And it's going to definitely be by the rumor, sell the news. And the second one, which is smarter, what they're trying to do right now, but the Chinese are also playing hard to get even for that, is dissecting it in smaller parts. So delivering something negligible as a phase one that will at least support fake market optimism that, okay, we got some type of phase one, so why not? That will eventually lead to some type of phase two that will, might have more substance and, more tangible results in our trade deficits or whatever against China. Of course, as I've explained time and time again, the trade deficits against China and against anybody else are not going to change no matter what kind of a deal you do, simply because you have stupid and irresponsible fiscal and monetary policy, which pushes away the US and other developed nations' economies from actually being producers. And they have tried and succeeded in making the business model of the economy, so the economic model of the country, consumption based on credit. Now, is this viable? The answer is and historically looking 100% non-viable. Now, does this mean this is going to implode in a week from now? No, it doesn't. Might last for another business cycle, who knows? But is there escaping gravity? Is there escaping basic economic logic? No, there isn't. No matter how much they manipulate it, at the end of the day, gravity and basic economic laws are going to take hold of the situation. Um, uh, Rates, as we've also seen a small sample, are going to go out of hand, as we've seen a small sample in the repo market, are going to in general go out of hand when everybody realizes that national debts and national deficits are unpayable. So then we're going to have to find some, some kind of a rebalancing will have to take place. And guess what? It isn't going to be silent. It isn't going to be pleasant. It isn't going to be subtle. It isn't going to be easy, right? And it is going to bring with it a lot of social unrest. Coach?
How about in Greece? Will there be social unrest? What are you going to do when the fabric of society's under pressure?
Listen,
what are you going to do?
Listen, there are a lot of people that don't understand the following. And I've said it before, and it sounds really, really funny. Greece had to go through its own real bankruptcy 10 years ago, something that the rest of the nations don't want to do. The US has already gone bankrupt once, but they never named it bankruptcy in 1971.
Yeah.
Because when in essence you say that, just a brief history lesson, the reason why the world was persuaded to adopt US dollar as the world reserve currency was because post World War II, the US was basically the main producer for the planet.
Yeah, I'm just saying, and I do have an interview.
The US accumulated 85% of the world reserves. So
if
back
what
then,
you say is going to happen in the U.S., there's really going to be not many places to hide. I don't think Greece will be one either. So
yeah,
that's just my opinion.
I agree. But keep in mind that Greece has already gone through a bankruptcy.
Yeah.
And it is a nation that currently has a current account surplus of 3.5%. So Greece is currently not only doesn't run a deficit, but every year it puts aside to repay its debt 3.5%.
Yeah.
So the next economic downtrend is going to find Greece in a better place in comparison than nations that are currently running huge deficits, right?
Yeah, I guess if you're already in the cellar, that there's not that much further for you to fall.
Yeah.
Okay. Yeah. All right. So thank you, Steve. Jake, how are you, buddy? So Steve, S&P's 3087, testing that out. So Jake is with us from Trend Spider. Wow, Jake, you've been with us twice in a few months. So let me just get you ready to go and unmute you.
Hey, I'm here. Can you hear me?
Yeah, how are you, Spider?
I'm doing good. I'm doing good.
Are you a tarantula today?
You know what?
Or a black widow?
Let's go with the widow. Because
all right.
What the market's looking like at this
okay,
point.
So go ahead and share your screen, buddy.
All right. 1 second. How do you do that again? Share. Right in the middle. Can you see my screen?
Not yet. So it's that green box.
I think Steve has to stop sharing.
Oh, okay. Then
I can't start screen share unless.
Oh, okay. Then I'll take it, and then I'll.
There we go. Okay.
You got it?
Yep.
Okay. There you are.
Alrighty. Can you see my screen?
Yeah, got it.
Okay,
All right, so we're
perfect.
going to be talking about raindrops today.
Yeah, the reason why we are going to talk about raindrops is simply because there was an interesting raindrop that formed on all the major broad market ETFs yesterday, which signaled possibly a more selling event today. So I'm going to go over just raindrops, introduce them really quickly, and then go over a couple examples from yesterday where, it showed sellers were definitely in control.
How'd that Thanksgiving pattern work out for you on comparing it to 2016 on Thanksgiving?
So honestly, I have not looked at charts in a while, so I would need to go back and kind of.
No, I mean, when I was with you, it's only a week ago.
Yeah, I just haven't looked at the chart. So
okay.
As far as that goes, right now.
It was wrong. So you don't even have to go back.
Okay. So I still think the market is kind of just resetting at the moment.
Yeah.
There's a ton of gaps below. It looks like Swiss cheese below. So,
Yeah.
I think it was time for a little bit of a correction. But just to introduce TrendSpider real quickly, for those that have not heard of us, we are a charting platform. So we have the ability to do technical analysis, but also innovate the way technical analysis is done. One of these, the raindrops charts being one of those. And so there's really two parts of the raindrop. You've got your bullish raindrop here, which I'll dissect really quickly. You can see here on the left side, this bar, instead of the open, this is the VWAP for the first half of the period.
And explain what VWAP is.
The volume weighted average price. So if you look at, all of the volume over that particular period, in this case, let's say that this is a daily candle, then essentially the left side is the first half of the day's volume weighted average price. So it's just taking into account that actual volume weighted price rather than just, like a moving average or something like that.
So that's where the most volume comes in, near the opening price level?
So during the first half of the day, we can see that on the left-hand side, most of that volume was focused at the low of the day. So like any other candle, you're going to have the top of the raindrop be your high of the day. Yep. The bottom of your raindrop is the low of the day. And so what you have here is the VWAP, but then you've got the volume profile actually shown on the chart as well. So you can see that because most of this volume profile was focused at the low of the day, then that is why our volume weighted average price is right around here. Notice on the left-hand side, the volume profile is really, very defined right in the middle of the range here and kind of peaks right here. And that's why you've got your volume weighted average price here. So in this case, rather than your open on the left and your close on the right, like a typical bar chart, you've got your volume weighted average price. So it gives you a little bit of better idea of, the actual economics behind the move rather than, just the open and the close.
Is there an entry or exit on these raindrops that tell you, it's time, like you have a bullish raindrop? If you saw it around the close like this, is that a signal?
No,
or just information?
Yeah, this is just information. The reason I say it's a bullish raindrop is just because it's green. The neutral raindrop is going to be blue just because the volume weighted average price on the left and the right are equal. So it's like a true volume weighted doji.
Oh.
And then the bearish raindrop is just when your volume weighted average price on the second half of the candle is lower than the first half. So if you trade bar charts, your opens up here, your close is down here, it's red.
So let me ask you on the neutral, would it be comparable to like an inside day?
Not necessarily an inside day, just really a true equilibrium of both the first and the second half of the day where volume weighted average price was exactly equal. So buyers and sellers were completely undecided and, the price action was really pretty much equal across the day as far as the total amount of shares traded in volume. These will happen around reversal areas. So, an inside day, you may expect a reversal as well, but this happens a lot less than I would say inside days. And it depends on what chart you're looking at. So for example, Facebook is one that sometimes will fall signal. There's a ton of neutral raindrops that will form, But then if you're looking at SPY or maybe Bitcoin, your blue raindrops form much less frequently, and that's why they have more value. But it's not an end all be all. It's just another kind of tool to have in the toolbox. So what I'm going to be going over a little bit is the balloon candle, and you can use the balloon both on a bullish or a bearish setup. So for example, here we're going to go over SPY, and this is what I would say is like a bearish balloon. And what you can see here is you can see the drop, you know, right through this 1.618, which was previous resistance, blew through support here. And you can see during the day, there was almost like a liquidity gap here. And we know that because there was no volume really here. All of the volume was focused at the bottom of the range, showing that anyone that was selling or buying was doing so mostly at the bottom of yesterday's range, showing that sellers were definitely in control. And so, I mean, what are we down, like 0.7 this morning? So this was kind of a way to say, okay, you know, there's definitely volume at the lower part of the range. There's volume kind of aggregating there that could possibly be sellers coming in and then buyers maybe trying to buy the dip. But then if we go to the regular candle.
Looks like it filled a gap there on that. Okay. All right.
Yep. And so then this is pre-market. This is.
I wanted to ask you on the previous chart before we had the big candle down, raindrop candle down yesterday. Did the day before tell you something?
This right here, yeah, it showed us that throughout the day, we started with during the first half of the day on the left-hand side, most of the volume was near the top of the range. But you could see during the second half of the day here, most of that volume started to kind of push down, actually price to new lows. And we know that this volume pushed the price down to new lows during the second half of the day because there's no volume profile on the left here. So all of this volume was kind of telling us that sellers were coming in into the second half of the period, and then you had your continuation down the next day.
Okay.
This isn't like always going to happen. So for example here, right, we've got a very similar candle, shows the exact same type of setup where most of the volume during the first half of the day is up here. And then, you know, you've got your big selling, creating new lows during the second half. But, you know, we had a nice run up after that. So it's not an end all be all, but it is something that really helps you visualize how volume is flowing. So for example, this is kind of an opposite example of the raindrop, the balloon raindrop on the bullish side, where you've got something like this. You've got a bunch of resistance, and then you've got this balloon kind of forming where you can see a lot of this volume was aggregating above this resistance line. We'll just make this red. And so you can see that this was really showing that buyers did have some conviction here. And generally, if you're going to see a balloon outside of a hard level of resistance, whether that's horizontal resistance, whether that's diagonal resistance, you'll generally get a couple day move after that. So I'm not going to say always, but I've done a lot of research on these, and you're generally, when you have a balloon through resistance, you're going to get a nice gap up. So another example of this was BABA over the last couple weeks. You had really strong resistance here. And then we finally broke through it, and notice how all of that volume was kind of aggregating above the line. And then you had about a 5% move up the next 2 days. So it's just really showing you where that volume is within the range. So if I split the screen on IWM, and I go from just a regular raindrop, and then I compare that to a hollow candle the same exact day, you'll see here that this is the same candle. Let me just highlight this. So this particular candle here is the same on each one. And you can see this candle here with the regular hollow candle, all you can see is a wick above this red line. You can't actually see if buyers were in control, if there was any volume above this line, if this was someone just getting squeezed out of a position and they just had to, you know, do a quick market order to blip the price up. So we don't really know if this is true demand. And from this perspective, it looks like that we closed right at resistance. But if you look at the balloon raindrop, you can see within this wick how much volume was really flowing above this resistance line. So it's really giving you an idea of volume flow and how that
different picture.
Yep, exactly.
All right, interesting.
So that's something that we use a lot. IWM is another example. I mean, if you look at all the broad market indices right now, they're all showing this kind of inverse balloon here, where you're kind of having the opposite effect. But as I mentioned, this would be a lot more this would be more convincing if we were around like a hard level of support. We're kind of just in this area of just a big move up and then a big move down. So I don't think it holds as much weight as if you're looking at it through breaking down through support or resistance.
Okay, well, 162 was major resistance. We broke out above it, and now we're back to it. Is there anything in the raindrops that would tell you that breakout, you should be suspect of the breakout in the next few candles after the breakout? Is that normal action after a breakout to get those raindrops? After the big up day, you had 3 raindrops before the sell-off. Is that give you any kind of market tell that be careful of that up day?
In this particular case, not really, but okay. This is one of those things where you want to use this in conjunction with other levels. So, this particular raindrop chart isn't showing us a lot. Now, yeah. if we had a blue raindrop right here, that would have been a good example of maybe we're topping out. Because if we go to an example of like Caterpillar, for example, this is one that really moves very strongly with blue raindrops. And this is one of like the poster childs of raindrop reversals on the blues. So if I quickly go through this, you'll see anytime there is a blue raindrop, and they don't happen very often, it will generally signal either a reversal or kind of a point where price is kind of topped out, if you will. So I'm just highlighting all these different blue raindrops, and you'll see that they form right near the top and the bottom of these big waves that we're kind of seeing here. And so we recently had a blue raindrop here, which occurred about a month after our previous one. And so now we're kind of starting that next move down. We'll just have to see if this is actually a precursor to a bigger move down as well.
Okay.
But you can see here, anytime the blue raindrop, you've got a pretty big move to the downside. You've got a move here, and then you've got some kind of consolidation and just distribution before the move down. And then you've got these waves that really are defined solely almost by these blue raindrops. And so what you can do here is, let's say that you wanted to see what the return for a blue raindrop is on a particular stock. You can go in and just back test it. So you go to the raindrop here. Let's go to the daily.
I have a question from one of our attendees. Wants to know, when did they turn that color, before or after the move?
They turn that color at the end of the day. So generally what you want to do is you want to start looking at these candles about 20 minutes before they close, because they're constantly still forming throughout the day. So a lot of the time, let's say this is one I did on SQ. I was watching SQ. They had a balloon breakout here right around this area. And you can see that, if you were only solely looking at the daily, this is kind of information after the fact. It's after the day's been done. You can't really make a move. So you want to watch these raindrops form, like I said, about 20 minutes before the close, because before 20 minutes before the close, unless just some big chunk of volume comes in, you're going to get a general idea of how this candle is setting up into the next day. And, sometimes I'll wait 5 minutes before the close, just so I know, this is pretty much what we're going to close as. And so, for example, SQ, I saw this towards the end of the day. I was like, all right, balloon raindrops forming, and I entered the $70 calls a couple weeks ago. And then you had your nice move up. And that was solely based on this raindrop, because it was showing us that, it was kind of aggregating. And the reason why we call it a balloon is because if it's like a hot air balloon. If you put enough hot air in the balloon, it's going to cause the balloon to rise. And that heat rising is what's causing the balloon to go up. You can see here how the demand is essentially rising to the top of this range, aggregating at the top, and then you've got your continuation up. So that's the way I generally will do it, because that's a great point, right? You know, we've got this information generally at the end of the day where you can't make a trade anymore. So you really want to look at these right before close. This is a really cool example of SQ in a blue raindrop. So Dale, you asked, you know, what would be something that I would look for near the top of the range or top of the move? This would have been exactly what I wanted to see on IWM, right? So we had the blue raindrop form right at the top of this move up. You've got your move down, and then I think we're even gapping down again today in the 65s. So this was kind of your indication that things were starting to kind of reverse. Notice here you had 2 blue raindrops about 3 days before your next move up. You had a blue raindrop form here, and then you had a nice rally up from about 56 to the top to 64 within about a week and a half. So SQ is a good one actually to check out for blue raindrops. And so what you can do without having to go and look at every single blue raindrop, you just go here to raindrop blue doji, and we're going to test this and see, you know, after 30 candles, what's the average, or let's do 15 candles, what's the average return? And then we can actually go and test that out and see every time a blue raindrop is formed, what is the return on the chart? And so here you can see 27 positions have been analyzed over 4 years of data, which is about 1,015 candles, and the mean trade return is 3.9%. You can also see a lot more data here. So you can see the net profit, you can see the asset performance, you can see this particular blue raindrop did not beat just buy and hold. And so you can see if your strategy is actually going to beat just buying and holding the stock from that particular period that you're testing. So in this case, you know, without me having to go and measure anything, we've got our entry here. This is the blue raindrop, and the system said, all right, after 15 candles, 12.92% return. Same thing here, blue raindrop within 15 candles, 7.19% return. And then, you know, this doesn't mean that it's, you know, in this particular chart, it means that the blue raindrop is generally going to return positive rather than negative, but there's also stocks that will have more of a negative kind of bias whenever you've got a blue raindrop forming.
Does that mainly have to do with the general trend of the market?
So the blue raindrops is, what do you mean by that?
Well, you say there's some examples where it means it's bullish, and there's some examples where it means it's bearish. And
I think
you probably have more when the general market's going up. You probably have more of the bullish outcomes, right? And more of the bearish.
Yeah. I see what you're saying. Yeah. Most of the time, yeah. A lot of the time, it depends on how liquid the stock is, right? So. Yeah. Sometimes if you have a really illiquid stock, you may have 6 blue raindrops in a row, which at that point makes the raindrop not significant at all. There's other times where you have like Bitcoin, where it will actually be kind of almost a confirmation of the next leg in the trend. So for example, here, you can see if we go and back test the blue raindrop, see on chart, you'll see here, generally, these were forming at the stair step. So right here, you've got a blue raindrop forming right around the SMA 20, and then you've got your move up within about 15 days, 36%. Notice then we start to kind of form a base here. You've got your next blue raindrop forming, and then you've got a 48% move up. Then you've got your next blue raindrop here. You've got a little more base forming, and then you've got your next leg up. And
so
then
when you use these for signals, does it define your risk, and does it also help you with what the magnitude of the move, if the signal is correct, would be?
No, I mean,
or that's something you just have to do.
This is something that I would use in conjunction with probably 3 or 4 other things. It's not that I just get a blue raindrop and I'm like, all right, you know, mortgage the house on this. It's definitely not any type of thing like that. It's more of a way to say, okay, you know, this is something that I didn't see on the hollow candle. Let me switch over to the raindrop and see if there's something that I'm not seeing. Notice here how we didn't have a blue raindrop for quite some time when we were kind of just in the doldrums at the top here. And then we had a blue raindrop form, and then we started our first leg down. And so, you know, there are times where it's not going to have a very high R squared to the move. It's not going to have, you know, it's not going to be that correlated. But sometimes you can have some very interesting correlated moves, especially with like Caterpillar, as I mentioned. It really just depends on the personality of the stock. It's no different than if you were using the MACD. The MACD sometimes is going to signal really well on one stock, and then it may not really tell you much at all on the other stock, because each stock really has its own personality at the end of the day.
Okay. Very interesting invention. Who came up with it?
Our CTO and our co-founder, Russ.
Okay, Russ did. Okay.
He randomly one day last October, almost a year ago, from a little earlier than a year ago, just kind of sent a Google Doc and was like, yeah, I came up with this last night. And we're like, oh, that's weird. And then we started to get some feedback on it, and people started to really kind of like the idea of being able to see how the volume is flowing. And then we released it and got a lot of good feedback. And, you know, now we're just trying to continue to do research and see, you know, how they can be used most efficiently.
All right. Well, do you have a place for people to go to, Jake, for them to consider giving it a roll?
Yes, absolutely. You can go to trendspire.com, and we actually extended our Cyber Monday deal for an extra day. So you can get up to 40% off on an annual subscription, 25% off on a monthly subscription. So if you guys want to try it out, we have a free trial up to 7 days. If you need more time, we can always extend that for another 7 days too. So we definitely want people to try it out and make sure that it's a right fit for their particular strategy and technical analysis. And, you know, we hope it's something that can add value to your current process.
Okay. And what's regular retail without promos?
Regular retail is going to go anywhere from about $15 a month. You can see here. Of course, we've got the Black Friday in here too, but you can see these are some of the general prices here. So instead of $132, you're actually going to pay only $79.20 for the standard plan. Instead of $554 for the master, you're going to pay, instead of $924 for the master yearly, you're going to only pay $554.40. So it's a pretty good discount, you know, and we really want people to kind of come in and see if it's something that works for them. It's not your typical kind of charting platform. There's a lot of different features, so it's going to take you a little time to dive in, and that's why I want to extend that trial if you need the time.
Okay, and I believe, Jake, you also have get-togethers every week for people to collaborate and talk about things, right?
We do, and thank you for jumping on a couple weeks back as well. We do have a Sunday chart show, and you can come on and just listen to kind of what we're talking about. It's generally just the broad markets into the next week. Maybe look at a couple other stocks or other requests that people have. You can easily go on the chat and just say, hey, what is Roku's blue raindrop, or what does Roku's raindrop look like today? Is it a blue raindrop? Whatever. We're happy to take requests, all that good stuff. It's really there to, one, show more about how the platform works in real time, and then two, you know, provide some information into the next week. It's not advice or anything like that. It's just kind of you know, myself and one of our guests going over the markets and just talking charts.
Okay, Jake. Well, thank you and everyone. Very interesting software that they've come up with at TrendSpire, and Merry Christmas to you and Russ and the whole crew, and Happy New Year, and much success with breaking new ground in technical analysis, Jake.
Well, thank you so much. I always appreciate you having me on, and I hope you have a great holiday as well as everyone listening in. And if you guys have any questions, please feel free to reach out. hello@trendspider.com or on our Twitter @trendspider.
Thank you, Jake. Good hunting, buddy.
Thank you. Have a great day and a great week.
All right. Adios. So everyone, that's turnaround Tuesday. S&Ps are underneath the throwover line. Oil is resisting this weakness, so I still think there's going to be a chance to get short the oil. And dollar is still weak. So what happened yesterday, we're getting pretty good follow through. So have a great day the rest of the day. Remember our Cyber Week special, and we'll see everyone tomorrow. Don't just count your pips, people. Count your blessings and try and be one for others. Adios.